This is TechCrunch.
In a flurry of deal offers in the high tens of billions of dollars, the bidding war for Warner Bros. Discovery is over. David Ellison-owned Paramount will acquire Warner Bros. Discovery. On Thursday, Warner Bros. Discovery announced that Paramount Skydance's newest offer of $31 a share was a superior proposal, giving Netflix 4 business days to counter. Netflix then said it would not raise its $82.7 billion all-cash bid for the legacy studio and would walk away from the deal. Netflix co-CEOs Ted Sarandos and Greg Peters in a statement. Thursday, the transaction we negotiated would have created shareholder value with a clear path to regulatory approval. However, we've always been disciplined, and at the price required to match Paramount Skydance's latest offer, the deal is no longer financially attractive, so we are declining to match the Paramount Skydance bid. Per the terms of the original deal, Warner Bros. Discovery will have to pay a $2.8 billion termination fee to Netflix to end the existing agreement. Paramount's renewed offer, backed by the world's 6th richest person, Oracle's executive chair, and David Ellison's father, Larry Ellison, includes paying that breakup fee. The new deal will see Paramount, which was bought just last year by Ellison's Skydance Media with heavy financial backing from his father, acquiring the entirety of Warner Bros. Discovery, including its studios, HBO, its streaming service, its games and entertainment divisions, and linear television networks like CNN, TBS, TNT, Discovery, and HGTV. Ellison, whose Paramount already owns major studios, entertainment, and news businesses, has warned of significant job cuts. His ownership of news network CBS has also attracted controversy and has largely been seen as a sympathetic turn toward the Trump administration, with reporting critical of the administration shelved or facing increased scrutiny by Ellison and CBS's editor-in-chief, the conservative provocateur Bari Weiss. Larry Ellison is a major donor and supporter of President Trump. Netflix had announced its intent to acquire WBD in December, offering nearly $83 billion for its studios and streaming service alone. Despite several hostile takeover bids by Paramount, Warner Bros. Discovery reaffirmed to shareholders its belief that Netflix's offer was superior to Paramount's, which offered $108 billion for the full company, including its linear television networks. Paramount's newest bid of $31 a share values WBD at about $111 billion. Paramount will take on the about $33 billion in debt held by Warner Bros. Discovery. Larry Ellison, whose net worth is $201 billion, according to Bloomberg, has agreed to supply the additional equity to fulfill Paramount's bid. Paramount's market cap is about $12 billion. The deal is also being financed by a $57.5 billion debt commitment from Bank of America, Merrill Lynch City, and Apollo Global Management. Netflix shares jumped as much as 10% in after-hours trading in New York. Shares in Paramount were up 4.5%. Plaid, a company that connects financial applications to users' bank accounts, enabling payments and data verification, has allowed employees to sell some of their shares at an $8 billion valuation, the company confirmed to TechCrunch on Thursday. The valuation represents a 31% increase from the $6.1 billion valuation the 13-year-old company achieved in April of last year, when it raised a $575 million round led by Franklin Templeton for partly the same purpose, purchasing shares from employees, including to help them cover the taxes associated with converting expiring restricted stock units into shares. Despite its new, bigger headline number, Plaid is still valued at 40% below its $13.4 billion peak in 2021, when ultra-low interest rates drove a massive surge in fintech valuations. Such transactions have become increasingly common among private companies using liquidity as a retention tool. Recent examples include Stripe, which this week said it would allow employees to sell shares at a $159 billion valuation, as well as Clay, 11 Labs, and Linear. Beyond retention and to help staff cover tax bills triggered when RSUs vest, they relieve pressure on management to pursue an IPO before the company is ready. That's it from TechCrunch. For more stories like these, go to TechCrunch.com.